Welcome back. You're watching the Small and Mid Cap Show. I'm Mahima Vajrajani. With me is Harsh Saita, and we're also joined by Anushi Vakharia, who tracks the real estate space very closely. Now we're going to talk to Abhishek Kapoor, who's the Group CEO of Puravankara. Puravankara came out with its Q1 FY25 numbers. Good set of numbers. Abhishek, welcome to the show. My first question to you is that there's a 2x jump in the revenue, you have a target of delivering roughly 3,500 to 4,000 units this year. What is the kind of units that you've delivered in this quarter particularly?
Well, thank you for having me on the show. So we've delivered over 900 units in the last quarter, in line with our plan for delivery, as you rightly said, 3,500 to 4,000 units. We're quite excited now with the future launches that are coming up. So the quarter has been very good. Our collections have been very good, in excess of 900 crores. Cash balance is over 1,000 crores. We have deployed over 700 crores in new acquisitions. We have added about 4 million square foot of area for development in the last quarter itself, and of which about 50% is added in terms of investment is in Mumbai. So overall, I think we're very, very excited with the last quarter and looking forward to the next.
Hi Abhishek, Anushi joining in. Glad to connect with you again. So this is just a follow-up on what you've mentioned, 900 units that you said we have delivered. Again, with this, do we expect in the next consequent quarters also to this 2x kind of growth continuing in terms of revenue? Along with this, I also want to address the booking value. So booking value overall has remained flat over this quarter. So what's your outlook? Are we seeing some delays happening over here because we have 14 million square feet of launches planned for FY25?
Look, as our launch plan is pretty much intact. Yes, there was some deferment of few launches, but the launch plan is very much intact. These are all projects which are in advanced stages of approvals, and we are expecting in this coming quarter and the next 2 quarters, which is actually the peak period for the business generally. We're expecting all those launches to happen. So that's as far as launches are concerned. And relatively, it was flat because we did not do any new launches in the last quarter. Having said that, our sustenance numbers have been pretty good. Our realization went up, so on the sales bit, I think we will see these launches coming in to bring in more value as we go along. And as far as possession is concerned, as you rightly said, we have about 3,500 units to deliver this year. We are confident that we'll be able to complete those and hand over. And therefore, relevant revenue recognition therefore will happen versus about, I think, 2,200 odd units that we delivered last year.
Abhishek, just curious, want to understand how margins for you evolve. You're currently at 20. You have 3 categories of product that you work with, if I can call it product, but 3 categories of product. How are margins in each of those, if you can just give us an understanding?
Look, when you see our current margin, which is at around 22%, what is it that we are taking a hit of? And consistently, we have been on these margins. Today, it is looking relatively lower because a lot of sales, marketing, and expansion overheads hit our P&L as of today, even though we can't recognize those revenues today. Right? We can only recognize what is being delivered today. So those costs hit us today, and therefore it looks relatively lower. Companies, and therefore, we are continuing in that direction. If you look at it brand-wise, typically Provident is somewhere between 27 to 30%, Puravankara between 30-35%, and if you look at Purva Land, it will be in excess of 35%. So on an overall basis, blended basis, we continue to target our margin of 30%, but that will evolve over time as we, this gap of high expansion kind of narrows down a little bit, because then the delivery picks up a lot more. So I think it's just a matter of time when we are going to be able to see those margins on the paper once we start delivering a lot more.
Understood. Abhishek, now I want to shift focus to, balance sheet side of things. Your net debt has marginally gone up. So from a longer term perspective, I want to understand that what is your trajectory going to be like when it comes to your total debt?
Look, that's a good question. So while you say it has gone up marginally, what has happened? So the investment has happened in 2 spaces, right? I mentioned a little earlier. we have deployed about 760 crores in new acquisitions, but the debt has only gone up by 86 crores. Plus, we continue to build our commercial portfolio where we have not generated any revenue, but that construction goes on where we have created capital asset of another about 40 plus crores. So if you look at it, I think on an overall basis, the debt hasn't gone up, but investments have significantly gone up. And of course, the good part is you're still sitting with, a cash balance of more than 1,000 crores, which allows you more deployment in the coming quarters. The idea here is that you continue to scale your business, you continue to do new acquisitions, and ensure that you replenish your land bank for future growth while keeping the debt at similar levels. And that will make sure that, your overall business is so much higher that debt relatively becomes, irrelevant as long as we try and keep it in similar range. That is one way to look at it. That's in absolute numbers. But if you look at it in another context, we look at debt on per square foot basis of area under development. When we look at that figure, what we see, and that is so relevant in the context of the business, because debt and business has to be looked together. If your business is scaling up really quickly and a lot more, and the debt remains under a range bound limit of area under development per square foot, which is less than 1,000 rupees, we should be always very, very comfortable, because basically your average realization is excess of 8,500, 9,000 rupees a square foot, and that is a very good position to be in. So I think we'll always keep that balance and make sure that we continue to grow. Our focus will continue to be on growth.
Right. So again, it should remain below the 1,000 level, as you mentioned. But now I want to get a perspective on the whole real estate sector in general. Now with the budget announcement of the indexation benefit, which has been scrapped, what do you think about this announcement? How is it for a company like Puravankara? How do you look at it in that manner?
Look, the way I see it, it's actually fantastic for people who are sitting with long-term gains, which is for property, especially bought before 2010. I think a lot more upgrades will happen. I think a lot more demand for larger units will come in, where people will look at offloading their current, because it's a big tax break that's been given, in fact, for people who are sitting on assets which are older than 2010. And I think it's a good opportunity for all of these people who have invested in the past to upgrade and look at new acquisitions. So I think it's very, very positive for the sector, and of course for Puravankara.
Okay, Mr. Kapoor, last off, any equity raise plans?
So we have had a board approval and a shareholder approval for a QIP, and we will update as and when we can share more information with you. Having said that, all our options are always open in terms of capital raise. We've recently done a platform with HDFC. In the past, we have had investments from IFC. And of course, we have had partnerships with Keppel Land. So we'll continue to look at those opportunities. Of course, we have our own AIF. And then, all of the public markets always an option to look at. So we'll continue to look at all opportunities because, as I mentioned earlier, we are really focused on growth.
Understood. And the other piece is that will this mean promoter ownership will fall?
Look, so, if you do the QIP, as long as the company decides to do it, yeah, marginally it should come down.
Got it. And collection pipeline or collection expectations, if I can call it, for FY25 with the launch pipeline?
So look, as I said, in terms of focus is first monetize your existing land bank. And the 14 million you all spoke about a little earlier, which is our launch pipeline, is in that direction. And of course, there are some new acquisitions which may get added to that launch pipeline as well, including the phases that we are doing. So in fact, if you look at including the phases of earlier projects, it'll be about 17 million square foot that we will take to market in this year now. So that is really the idea there is to unlock the equity which is already invested in our projects and the margins thereof, which will enable us, as I mentioned and demonstrated, in the past 2 years, that today, if you look at your collections, that is in excess of 900 crores, closing to 1,000 crores almost. And then your cash and bank balance is almost about 1,000 crores. And still you're continuing to invest more than 700 crores in a quarter. So I think that surplus and reinvestment and making sure that your capital churns is critical to our business. So our focus will remain in ensuring that we monetize our investments and we continue to deploy capital and churn the capital as quickly and as many times as possible. Therefore, hopefully, as we go along, better return on capital.
Right. Well, Abhishek, thank you so much for giving us those elaborate answers and taking our time and speaking with us at NDTV Profit. But with that, it's a wrap on the small and mid-cap show. But remember, India Bulls Housing Finance Limited is now Samman Capital Limited. Jio Samman se, and keep watching NDTV Profit.